All right, guys, in this video, we're not just going to look at the typical futures versus FX prop firm type thing. We're going to go into detail regarding which one you should choose. And I'm going to show you guys some pretty mind-blowing statistics. We're going to get into the Excel spreadsheet, and it really is going to blow your fucking mind. So let's go ahead and look at it here because this blew my mind. And I did the spreadsheet for me because I was curious how these numbers break down. You know, I trade my own live futures account, but I do that because of tax reasons and, you know, just it's easy. You can take out money when you want. There's no rules, like all that kind of bullshit. But this is still really interesting, and I want to show it to you. So let's look at, we're going to look at, you know, basically using Top Step as a model here for the futures, although this applies to all of them, Apex, Bulanox, and, you know, just Trade Day, UProfit, all of them. So just think of Top Step as the representative here. I'm not affiliated with them. This is not for any particular reason. And let's just use FTMO as the representative for the FX CFD side. The question is, which one of these is better? Well, let's look at the numbers here. This is really interesting. So with your own account, let's just say you've got $5,000. Okay, this is a cash account. You got $5,000, and it doesn't matter. You want to trade this on CFDs, you know, eat your heart out. You want to trade it on futures really aggressively. That's great too. So you got 5K here. Now, let's just say you're going to be super aggressive with your money, right? Because I'm looking at an aggressive model. How can you aggressively try and grow capital, right? Because to sit here and do, you know, whatever, you know, you do like 10% a month on your money is awesome over time, right? But if you do 10% on 5K, that's not going to do a whole lot for you, right? You're going to make $500, and then you got to take it out to pay bills, and you know, you're basically just churning your wheels for no reason. So let's look at an aggressive, super aggressive model. So let's say you actually have 5K, you can kind of pull together. And if shit really hits the fan and you lose it, like, it's not going to change your life too much. You know, it'll suck, but you'll survive. Let's look at it that way, right? And if you don't have 5K that you can't lose and still kind of survive, then don't do this, right? This is for aggressive traders who have a little bit of money to lose. So you're risking 5% per trade on your cash account, right? So you're risking $250 per trade, right? Your risk of ruin, then you've got 20 straight trades that you can lose in a row, and then your account will be blown out. Now, the odds of that happening aren't good at all. It's you know, infinitesimal in terms of the actual odds of that happening, but people will find a way to fuck it up. So you got to keep in mind that that is a possibility, which is why when you do this model, just kiss that money goodbye. You'll feel better. The trading will be easier. You're not going to be attached to the, you know, when you lose. Not getting attached to the wins is a whole nother thing. But all right, so let's say you have a 50% win rate and you only have an R factor of 2. This is pretty basic, pretty easy to hit, right? So if your win per trade is $500 and your loss per trade is $250, and let's say you take 2 trades a day, right? I'm saying be selective, you know, don't be an idiot, take good trades. Let's say here, you know, you're up $250 on average at the end of each day. Okay, that doesn't mean you're not going to have losing days and stuff like that. You will. I'm just taking the averages here, right? So you're up $250 a day, right? So 20 trading days a month. Let's say that this aggressive model gets you to a $5,000 payout on your own money, right? So you made 100%. That's great. You made 5K. I mean, that's really, if you can do that on, you know, a $5,000 account, that's obviously amazing. And the thing is that you got to look at what do you need to be able to do here to get to that 5K? Well, you know, you've got to be able to basically just have a hit rate of 50% and try and let your winners run to 2 times the amount of your losses. That's not that hard. It really isn't that hard. So actually you should be able to do this. You have any kind of an edge. Okay. So now let's just say you have a horrible week and you lose 10 in a row, right? And the odds of losing 10 in a row, again, are super small, but you know, it happens to the best of us sometimes, especially if you're just trading super aggressive and it's just a, you know, a bad week. Sometimes shit can happen, right? So on this model, let's say you set your risk tolerance because you want to give yourself a chance of a couple of weeks, right? You don't want to blow out in the first week, you know, of your total risk. So let's say you have 10 in a row, just your first 10 trades that whole week, just every day you lose 2, you lose 2, you lose 2. You're down 2,500 at the end of the week. Okay, no big deal. You still got 2,500 left, whatever. That's fine. Okay. Now, but let's assume that's just a really horrible week, and hopefully that's not going to happen to you. So let's just assume that you actually follow these numbers. You know, you made your $5,000 profit, so you made 5K, and you still have, you know, your fresh 5K to trade starting the next month. That's nice, but you know, then you got to do this again, which, you know, you can do it again. So that's not bad, right? So, and again, I'm saying super aggressive here, guys. Okay. And people, oh, 100% of your account. It's really not that hard when you break down the numbers in terms of, okay, you just have to be right 50% of the time and, you know, make 2 to 1. It's not that big of a deal, right? I guess you do have to have an edge that you can turn over twice a day. So that maybe is going to be the sticking point for some people. If it is, come by the channel and just take the trades. I call it in the live stream. You'll get 2 a day, probably on average. Some days I don't take any trades because there aren't good setups. But if you have an edge where you can get those 2 decent probability trades per day, these numbers work for you, right? But now here's where it gets super interesting. Let's look at the 150K challenge from Top Step, because honestly, like 50K, I don't know, like I don't really see the point. If you're going to trade, you know, try and trade and actually make some money. Okay. So let's say your starting fee is 150 bucks basically, right? Your activation fee is 150 bucks. So these numbers might not be perfect. I did this kind of quickly. So if I'm off by a small amount, you know, don't crucify me for it. Just take the general idea that I'm giving you here for this video. So let's say this is for a week. Okay. Let's say that you're going to go nuts, right? You're going to go super aggressive and you're going to fail 11 accounts, right? And you're going to pass 3 accounts, right? So what I'm basically saying here with the prop firm is I'm taking, you know, how did I get to these 14 accounts, right? That I want you to consider taking, right? So remember, I'm not affiliated with any prop firm, so I don't really care what you do. I'm taking what's your worst week going to be on your cash account, which would be 2,500 bucks. I'm like, okay, well, how that's going to be my worst week. How would I spend that over on, you know, prop firms? So this is how I get, you know, this number here, cost per week for the futures for the Top Step, 150K. If you're really willing to spend 2,500 in a week at 149, and then of course you got to activate the ones you win. But these are how the numbers break down. Let's say if you're willing to risk that for the week, right? Because you got to be willing to risk the same amount to make it kind of apples to apples, right? So if you're willing to risk 2,500 over here to get to these returns for the week, you got to be willing to risk, you know, something similar over here. So that's why we're taking that risk amount, and those number of accounts at these prices got us to this total risk amount, right? So if you fail 11 accounts, these are 150K, right? Let's just say you fail 11 of them. You're going to be out about 1,600 bucks there, right? But let's say that you pass 3 accounts, right? Well, now you're actually still out another 894 because you got to pay, you know, you still paid your starting fee on those, and then you also paid your activation fee on those, right? And it's going to get super interesting, guys, when we get to the FX side, right? I put a lot of thought into this. So, because I've been wondering, like, am I an idiot for trading my own capital? Should I trade one of these? And maybe I will for the channel. Maybe we'll do some kind of fun thing. I'll think about it. I'm probably leaning toward, I'll tell you what I'm leaning toward at the end. So right here, if you pass 3 out of 14, right? Because you got 14 total, but those 3 you passed, you basically out 894 for those, right? So this kind of brings your total cost per the week, you know, to 2,500 bucks. Now, what I'm saying is that, and look, if this takes 10 days or whatever, don't, you know, sometimes it takes a little longer to get to pay. Just whatever. Just look at the numbers, okay? Doesn't matter if this takes you a month. Just look at the numbers. You can break this down however you want, on a weekly basis, a monthly basis, every 2 weeks maybe. So let's say that you get one of these accounts, right? Because these are you got 4,500 to draw on these big accounts, right? There's really no reason. You're trading super aggressively here. I'm gonna advise you how I would trade these, not a strategy or anything, but how I would approach these and these, just like you're doing over here on your cash account. But we'll get to that in a second. So let's say that you get one of these accounts, right? So you had 14, you failed 11, right? And I think that's reasonable because you got, you know, end of day drawdowns and stuff like that. So I'm obviously, I hope you're able to pass more than this. I'm just trying to give a worst case scenario, okay? And you passed the 3 here. Now what I'm saying is that out of the 3 you passed, let's just say you only get 1 to pay out. You know, you make 5K on that account, which you should if you got, because right over here, if you were able to make 100%, then on that one draw of 4,500, you know, you should be able to make 5K on one account out of 14 trading super aggressively. I really feel that that's realistic. Again, if this is going to be over a week-long time frame or 2 weeks or whatever, it doesn't really matter. But there's your one account that you got to pay out, right? So now you have your payout, which is 5K minus your cost, right? With 25.33 for all those accounts. And your net profit for the week or whatever, if you want to do this over 2 weeks, you make basically about $2,500, right? That's not too bad. So that's pretty. So for the month right there, if you were able to do this weekly, let's just say you're able to do it, because you got these futures accounts and whatever, and you're kind of doing 14 accounts. You're probably able to do this maybe once every 10 days. So you probably do this 3 times. But so let's just say your profit could be anywhere from 6, 7K to 10K per month using this model in the prop firms. And again, you're only getting 1 account to pay out of every 14 that you actually sign up for, right? So, and let's say on this one, if you have 10 in a row, which is a bad week, the good news with the futures prop firm, this is probably the best thing I see. Like if you really suck, this will determine which one of these you should go for. If you really suck, probably the futures aren't bad, because if you have 10 straight trades in a row that fail, let's say because I'm going to tell you how you should buy these as well. You don't just load up on 15 accounts at the start of the week. Let's just say like you start with 2 per day. You lose 2, you lose 2, you lose 2, you lose 2. Well, at the end of the week, if you lost 10 in a row, and I'm going to tell you why it's 2 per day, because it's 2 trades per day. I'm suggesting you risk an entire account on each trade that you take, because that's kind of similar to what you're doing over here. You're risking $250 per trade. Well, why not risk $150 per trade, right? So treat each account as a trade. It's gonna help you better too, because you're not gonna be attached to the account. You'll stop failing, right? So if you have 10 in a row bad week, you lose $1,500. I mean, that's pretty good for the amount of upside you have. You only lose $1,500. So that's where the futures prop firm is good. If you suck and you're probably gonna lose 10 straight trades in a row, which hell, now that I'm saying this, I probably will on my live stream, just because I'm kind of being a dick about it. I'm just kind of having fun, you guys. Don't hold it against me. Anyways, if you're struggling and you're learning and all that kind of good stuff, if you lose 10 in a row, the damage is not that bad, right? Now let's look at, I'll leave it all up for you. Let's look at the FX, right? So this is for, let's just say FTMO, you got here FTMO, or, whatever, any of the big ones. This is just a general idea. I know the fees vary, please, just, this is a generalization. But let's say you do the 25K accounts, right? So for FTMO, I think that's like, you're going to see where this gets super interesting, you guys. So it's 25K, you get 2,500 in draw, and you got to pay $250 for it, right? Well, the dollar is a little weaker against the euro, but you get the idea. It's right there. And you got other prop firms too, right? So if that's the case, say you pay $250, right, per account for 25K, and you don't have any activation fee on these, which is nice. There's huge advantages to these over here. Wait till you guys see this. And believe me, I'm a futures trader. I love futures, but I'm giving you guys, the realities of which account you should choose. If you absolutely suck and you're really learning and you want to learn, then just do one futures thing at a time. Do it slowly. Learn as much as you can from it. If you're progressing and you're getting better, but you're still a little scared of losing, probably still do the futures, because your bad week is going to end up, a lot better. If you have a horrible week, you're not going to be out as much on the futures. But if you're trading even with just a little bit of consistency and a little bit of confidence, I mean, obviously, if you have a ton of money, just trade this for futures, your real account, because tax reasons and all that kind of stuff. That's why I trade for tax reasons. But I might do this over here, what I'm going to tell you in a second, just because it looks fun and it might be something to, do for fun on the channel, on the live stream. So let's say you have $250, right, per account. And let's say, again, we're dealing with 14 accounts, because I want to try and take a similar risk per week here. So, as we're taking on a supposed cash account here, 2,500. So, they're more or less similar, right? You got 2,500 risk here. You got 2,500 here. You got 27 here. I mean, you're in the ballpark, right? We're not counting pennies here. So 2,750 for your risk there. You get basically you fail 11, right? That's your cost of failure. Did I do that right? Let me see here. Fail 11. So I want you to, yeah, so your cost is actually less here. So let me just fix this. So we'll just do, so your cost actually is $2,500, right? Because oh no, this is going to be your cost per week. Sorry, this is not your worst per week. Bear with me here, guys. So this is going to be your cost per week. It is going to be there, right? So just leave that. All right, that's your. I'm not going to edit this out. I don't have time. I think you guys will get a lot out of this video. The cost per week will be $27.50, right? Because if you failed 11, right, that's what your cost was on those failures. But if you pass 3, you actually get your money back. That's the big thing about the prop firms, right? You get your refund. Okay, so that's a big. Some of them even give you bonuses. I'm not calculating that. Over here, Top Step, with your first payment, they're going to give you $149 back for one of your monthly fees. So these are just little bonuses. Don't worry about those right now. But here, you're going to get your full refund back. So it doesn't cost you anything on those 3 accounts that you passed, right? And the one account, again, I'm saying you're trading this aggressively. So even though you still only have 2,500 to draw down on this account, and you got technically 4,500 in drawdown over here, it kind of balances out because you got to hit more profit over here. You got to hit a lot less profit over here. And this draw is trailing on the futures, even though on Top Step is trailing end of day, which is a little bit easier. But over here, you're not trailing at all. So I think you should still, out of 14 accounts, you're trading aggressively. I'm going to tell you how to trade the strategy in a moment, not the actual indicators and stuff, but just the risk strategy. So if you get one of these accounts to pay out, again, you got 5K, right? Just like you got one of these to pay out for 5K. Now here's your payout minus your cost is $22.50. So your profit per week, $22.50. And these are important numbers too, right? I'm saying you're only passing 1 out of 5 challenges, which when I show you how to do this, I really think you should be able to do this. And I'm saying that your payout pass rate is only 7%, right? So it's like less than 1 out of 10 accounts are going to get to pay out. I think that's pretty reasonable. Let me know what you think in the comments if you think this is, unreasonable in any way. I don't think it is when I show you how to do this with the risk management. So here, your profit per month, and maybe it'll take a little longer. Again, don't crucify me on this, but say 9K, or if this takes you once every 10 days, say your profit here is like, you can multiply that by 3 times. So you make 7,500 a month here, 7,500 a month here, 5,000 a month here. Either way, you're making more on these than you are on your personal money, which is good. That actually is good. But for tax reasons and stuff, still there are benefits over here. But here, if you're making more on these accounts than you are on your own money, that's a pretty big benefit. But here's the thing that really is kind of the kicker for me. So let's say here, if you do have a bad week and you lose 10 in a row, you are out the 2,500. But that's going to be the same as your own account, right? You're also going to be out 2,500 on your own account with these risk parameters that we looked at. But here's the kicker, you guys. So at the end of the month here, when you take that $5,000 withdrawal on that one account that you passed, you've got 2,500 now of capital, because when you take your payout on the futures account, that account's basically gone because they calculate your payout as your cushion, which in my opinion is kind of bullshit, but that's the way they do it. So if let's say you take that 4,500 Top Step account to 5K and you want to take out 5K, that account's basically gone. Like, you no longer have that 4,500 in drawdown, even though you didn't lose anything, right? So that's why the futures firms, when you start making money, I think are pretty stupid. Unless, of course, you're going to be a live trader with them and, they give you all kinds of money to trade, whatever. This is just for the average sort of person that we're talking about here, right? So this is the kicker. You can now, on this over here, at the end of the month, you've got that 2,500 account. Even though you took it to pay out, you still have your full account and your full draw of 2,500, right? So if you do this again next month, and then you only get 1 over the finish line, you'll have 5. So now all of a sudden, just 2 months of profitability, you'll have your own capital, same $5,000 here, but it'll be the prop firm's capital, right? And I know I'm not counting, like it's an 80 or 90% profit split or whatever, but guys, that's like, you can do this. Those small differences aren't going to make enough of a difference to make any of this matter, okay? So if you can do this for 2, 3, 4 months in a row, and then all of a sudden you're building up your own capital base here with the prop firm over here while you're still making this money and you're not putting your own money at risk. So it's actually not a bad situation. Now, here's what I would do if I were you guys, and I'm thinking about whether or not I want to do this. And again, you can scale this up, right? Depending how much confidence you have, plug in your own numbers on what your own hit rate will be on your past failure rate. But the way I would handle it is you can do your numbers by taking however much your account is now and how much you risk per trade, right? And then just plug that into the type of challenge you could do per trade, right? So like, to risk $250 a trade, that's not bad on an average trade, right? So on an FX prop firm, if you're willing to risk $250 per trade, right, then what I think would be really interesting, and I might do this for the channel as I'm calling out the trades in my live stream like I do every day anyways, is instead of trading my own account, I might just trade an FX prop firm with a 25K account, but I'm not looking at it like that. I'm just looking at it like, hey, I've got 2,500 here of draw to lose, right? Here's your max loss, 2,500. So if I've got that 2,500 to lose, and yeah, I know they do like, 4 days and all this kind of stuff. So you got to think about these things. I can't go into all the details here for you guys, but you get the idea. So like if I was to do this, I would say, okay, I would just treat the 250 as one trade, right? And then I would say, okay, I'd look at FTMO, for example. And I would probably find something that's cheaper because there are other prop firms that are cheaper. Why not get the most for your money? And then also the ones that like allow you to pass in 1 day or 2 days or something like that, right? So, but let's just use this as an example. So on that 2,500 profit target right there, right? And let's just say that you get one of these other firms where you get the 2-step and, you need to make, let's say you got to make 3,500 and you got 2,500 at risk. Well, that's how I would just set up my trade. So like if I was going to go, short the NASDAQ, like I did on my channel the other day and had a really nice trade there. Instead of doing that on my own money with the futures, I said, okay, well, I'm going to risk, X amount and I'll do 2 contracts. Like on that trade, I can tell you, I did 2 contracts. I would bring up the chart, but just go watch it on the channel. Dude, I did 2 contracts and my risk on that trade, I don't know, was probably, had it gone, I picked the top of the day very well on that trade. Had it gone against me, let's just look at this, right? So I had 2 contracts, right? Which means, well, let's just say 1 contract because I'm trying to make it, apples to apples. So let's say you risk 1 futures contract on the NASDAQ, right? So you have one percentage, so just ignore that. You got 1 futures contract. There we go. 1, right? Times $20 a point, right? So, right, we got to do the equals. Just look, if you want to make a lot of money, just pay attention here and watch this. So here you got $20 a point, right? So let's say, on a right, you can take, let's say you take 250. What is it? You can risk about 12 points, right? Divided by, that's per contract on the NASDAQ. Yeah, so you got 12, basically 12.5 points of risk. That's not bad. So like if you, on that trade right there, if I risk 12.5 points, right, for the NASDAQ on 1 contract, if it loses, I'm out 250, right? But the thing about that's really interesting, right? Like on that trade, let's say you make, say you only make 2 to 1 and all of a sudden you make $500, right? Yeah, but we calculated that over here, right? Because that's how you're thinking, right? So yeah, but we already went into that. If you're making 2 to 1 on that trade, so you risked on 1 contract, you risked 12.5 points. So basically the way you would structure this over here on the prop firm, they have their CFDs, right? So on the CFD, it's like whatever you said. It's if you're trading in a US dollar denominated account, you trade $1 per point on the NASDAQ, right? So if you've got 12.5 points, in this, you can set your risk whatever you want, which is nice. You're not on fixed futures contracts. So that's also a bonus. You can really hone in your risk. But let's say in this example, you're using the same 12.5 points of NASDAQ risk, right? I'm not saying that would be my actual stop. This is just for the example. So if you risk 12.5 points, right, and you want to make it 250, right, then you'd have to set it up for $20 a point, sort of the same thing, right? So on the CFD, you would just set that to 20, right, to make it like the futures contract. But it's going to be different for gold, silver, whatever. The point is, you can set each one of your trades on your system, on your whatever trading system that you think has an edge. Set it to risk on 1 single trade that amount, right? Because if you risk that amount and you lose, well, yeah, you blew an account over here, but it's the same thing as just losing 250 over here, right? It's like, it doesn't matter. You lost the money. So over here, you have a chance to not only make a lot more, right? But you're doing so with the potential to build up a lot more capital. And I'm not even talking about once you do this for a few months, not only do you continue to make this money, you'll start to compound your growth because your account balance is growing bigger over here where it's not growing over here, right? Because you take that out, right? I'm saying you're taking out and using the money. That's why in your personal account, you'd stay at 5. Here, you're still taking out all the profits, but your profits are going to grow because your account balance is growing, right? And you don't get penalized for taking out profits here like you do here, right? And the only other advantage I can see about the futures firms, which maybe I'll do another video on, comment down below, guys. Let me know if this makes sense to you. Let me know if where I'm wrong or how you see it, or if you want me to like address another, angle that I'm not seeing. But one thing, you could think about, I already talked about the profit split. That'll be, I still think that's inconsequential overall, but the resets, you do have resets here, and those do cost, those are cheaper. So technically what you could do with the reset, and I got to factor that in because that'll even lower this number here for the risk. So let's say, what's Top Step's reset? Is it 85 bucks? Let's just find that. Let me pause it real quick, guys. All right. If these numbers are accurate, let me know. I don't know, but Top Step here, at least what I can find on this intercom.com site, they're basically saying the reset is the same as the, what the account costs. So that's no benefit right there. But let's go into this, guys, because I think it's really important. If we do reset an account, let's look at, I think Apex has pretty good resets, right? They got like 85. So you do have the trailing draw, but for our purposes, I don't really think that's matter. We're giving ourselves a pretty low bar to get over in terms of our numbers here, like, right? So this could as well be Apex. Now with Apex, let's say we do the resets, right? Which are I think they're $85, right? So the question is then on Apex, which account would that be? Let's look at that in a sec here. Okay, guys, this is pretty interesting. I'm kind of just, learning as I know a lot about these things, even though I'm not in the prop firm world myself, but I know so many people are. That's why I'm doing this, because I'm interested. Number one, should I do this for the channel for some fun and because you guys love prop firms? And number two, am I being retarded by trading my own account when I could just trade prop firms? I don't know. That's why I'm looking at this. And here, where we're at so far on this journey, it's not a bad argument to be trading, especially the FX, based on the fact that you can grow your account, balance with them. That's pretty nice. And you don't lose your drawdown, right? But with Apex and the resets, even though you'll basically lose your account when you take a payout, you don't really lose your account the same way with Apex. Let's go into this, guys, because this could be, everybody says Apex is the best, right? Maybe that's why they're called Apex. They might be. Let's see. So I would, if we're looking at Top Step here, 150K, right? So that was 149. And I think we got to basically look at the Apex 300K, right? Because I think with 80% off, 657, what do you get down to? You probably get down to like 131. I think it's like $131. You guys can check my math, but let's say this is about 130 bucks. So it's even cheaper than the Top Step when they do their 80% sales, which they pretty much do all the time. And I think they're going to continue to do them because with Top Step's fees now, I think Apex is going to always want to stay ahead of Top Step. So I think they're going to always be at 70%, 80%, whatever. They do have the 1 day to pass thing, which is pretty huge. Like that's a pretty good bonus. I mean, Apex got a pretty good business model here, right? So the only fly in the ointment with this account is that you got to hit the profit goal of 20K, but I don't really think that's a big deal. We're trading aggressively. So it's just, you're just taking the same trades. You're just putting on more contracts, right? So, then you have the 7,500 trailing, but still that's, at least you got a decent cushion there of risk, right? And the good thing about this is that, what I love about this is it really lowers the cost of this entire model, because if let's say you take that first trade on the day, you sign up for the account for 130 bucks, you take that first trade of the day, you lose, right? You just quickly go over to your Apex thingy, reset it, right? And the reset is 80 bucks. Let's say your second trade loses again. So you lost, 130 plus 80, right? So you lost like 210 bucks on the day. Well, you're, look at that, you guys. If your risk limit per the day, remember what we talked about here? if your risk limit for the day is $500, right? Because you're risking 250 per trade, basically, kind of on all these models. Top Step gives you a much, if you're going to risk 2 Top Step accounts in the same day, you're risking 300, right? Because I'm saying risk an entire account per trade, because over here on your cash account, you're risking, right, 250 per trade anyways, right? So then I'm saying, let's make this apples to apples as much as we can. So on Top Step, say you lose your first trade 149, you got to go either reset it, which is the same price, so there's no benefit there, or you get a fresh account, right, which is same price. So if you lose 2 in a row on Top Step, you're down 300. Right, I got to redo these numbers as well because I'm talking. So I'm saying, let's just say you're risking 1 account per day. It doesn't really matter, guys. So here it's this was the result per day, right? Because you're taking 2 trades, one of them wins, one of them losses. That's how you get that 250 net per day. But let's just say you lose 2 in a row per day. That's $500, right? So let's go with that. You lose 500 on the day on your own account because you're risking 250 per account, right? Let's say with your budget of 500. That actually gives you, over here you have a budget of, whatever that is. That's 4 accounts, right? Basically, you've got 150. Well, almost 3 to 4 accounts, depending. Let's just call it 3 accounts over here, right? Because that'll be 450 for 3 accounts on Top Step. So you got a 3 account budget. That's a big deal, you guys. Look, for the 500 over here that you're risking, you only get 2 trades to risk that on. But I told you this would be worth it to stay to the end. See, I didn't even know we were going to come up with this kind of gravy. This is awesome. We're fucking crushing over here. So here's the thing: is if you're going to risk 500 here on a bad day, 2 trades, and then here on Top Step you do the same thing, right? Apples to apples. That's basically 3 accounts. So if you're risking 1 account per trade, now all of a sudden you've got 3 tries instead of 2. That's pretty good for $450. Even a little less risk. That's not bad. And then over here on the FX, you still only have the 2 accounts risk, right? Which is similar to your own account here. So in this case, the prop firms definitely take that cake in terms of fast funding, ability to get over the line quickly. But now if we're looking, I still think there's a huge benefit over here for building up an account balance, but we'll right now we're focused on this. So but this is Top Step, right? What about Apex? So with Apex, how many tries do you get? Guys, this is pretty cool. So with Apex, if you start out for, let's just do this. You start out for 130, right? And your reset is 80. So what's, 130 plus 80 is 210, right? And then 210 plus 80 is 290, and you're at 3 accounts, right? And then, 290 plus 80 is 370. You're at 4 accounts. And then 450, you're at 5 accounts. So guys, that's incredible. So with the reset here, I should tell Apex I want to be an affiliate. So when you guys start doing Apex, you can use my affiliate code, which I don't have yet, but I'm going to get one because, I didn't see this before, and I'm sharing it with you guys, and you're probably gonna be like, holy shit, I'm going to take this approach. You go sign up with Apex, you might as well, help me out and support the channel and, use my affiliate code, which I don't have, which I hope to get. So guys, look at that. You can, for that $500 risk in a day, you can do basically 5 Apex accounts, only 3 Top Step accounts, only 2 of your own trades, and only 2 FX. Wow. Okay, that's interesting. I think Apex is the leader here. I swear to God, I was leaning toward the FX model before I came into this, but now with sometimes you can pass in 1 day. But now let's look at their payout thing, because that's where the FX still has the advantage. So let's look at the Apex payout model. 1 sec. All right, we all know that Apex has a beautiful website here. They put a lot of time and effort into this. Just kidding. I kind of like it. They're like traders. They're like, fuck it, we're just going to throw this up. I like it. So let's look at their payout thing, right? You get it twice a month, I guess, or however that works. You guys know how that works better than me. But so then here, the taxes, whatever. We don't need to get into taxes. We put a comment if you want me to do video on taxes. I can, even though I'm not an accountant. I understand it pretty well. So here, required minimum to withdraw. So on 300K, boom, you need, once you pass one of those counts, right? I guess you got to make whatever, like your draw plus 600. Is that how these are working? I think so. You guys can correct me, but you got to make $7,600, whatever. That's not a big deal. So you make $7,600, and then how much are you allowed to take out? No, there's here. So on the 300K, you can take out 3,500 per payout. I mean, that's not bad, you guys. If you take out that 35 the first time, right, then you still, what's nice about that is you still actually, you have, you know, that 3,500 in cushion left, I believe. Tell me if I'm right or wrong, guys, but I think I'm right on that. You still have the 3,500 in cushion left, even though you took the payout, right? So then let's say you build that account a little more to like, you know, whatever, like you take another payout for only 1,500, right? Because we're only counting on like a $5,000 payout per one of these accounts. Now all of a sudden you've taken your payout, but you're keeping this account. Then when you pass your next account and get the payout, you're compounding. So now the problem for me is going to be, how much does Apex allow you to trade? I know they say 20 accounts, but am I allowed to have 300,000 accounts? Let's check, guys. Hold on. All right, so this is interesting. So basically, it's 20 accounts in the same house. So you can't like have 20 for yourself and then 20 for your wife. And okay, so that's fine. So you have 20. Now, what about the total? Can you have 2,300K accounts? Can you guys let me know? It doesn't look like you can't. Okay, so guys, this is kind of a game changer. You know, I'm going to end this video here, and I'm going to do another video right now only on Apex and a spreadsheet on how all this now translates into what I'm probably going to do for the channel, trading live, show you how I'm doing this, and show you how you guys can do it too. And please, for God's sakes, like, subscribe. Let's grow this channel, guys. I mean, it's a lot of fun stuff over here, and come to the live stream. I'm calling out trades. We're all taking together live in real time. You know, I guess if too many people come and subscribe and follow, that'll be a problem, because like if we have like, you know, 1,300K accounts between us, then Apex will shut down, which I don't know. I guess it'd be kind of like good bragging rights. Like if we were the ones that managed to tell Apex told us, hey, you guys can't trade anymore because we were too many of us following my signals with 300K accounts. But that'd be kind of a fun problem to have. All right. I'm halfway joking, but halfway not. Okay, guys, I'm going to do a special one on Apex. Like, subscribe, leave me comments down below on what you think I mixed and all, you know, what I missed on, you know, if I'm not thinking clearly. I think I am. And yeah, it's pretty exciting. Okay, see you guys. I'm going to do another video right now on Apex specifically.